Let's get going. Happy Tuesday, everyone. Sorry for the small delay here on the Twitter Space live. If you're watching this live, obviously on YouTube afterwards, you're not going to see much of a delay here. We're just going to record this here. But we had to get a couple of things done, and I just wanted to update everything, some of the slides, some of the numbers. Especially over the past couple of hours, we saw a bit of a pump in the markets, and I wanted to have that included in the numbers and in the prices and so on. So, that I'm not talking too outdated on everything. Welcome, obviously, to today's Twitter Space. We're doing these on Tuesdays, recording them as a podcast, YouTube Live. So if you're watching that on YouTube, I hope you enjoy this. And if you do, then please consider subscribing and following or sharing. That would be always great. Today, three topics. We're going to talk a bit about cake updates, a little bit to discuss. Bernd, a top moderator for us on the Telegram, has compiled a nice list of questions. So we're going to actually simply go through that. I think this makes the most sense. And then aside of that, we're going to have two topics. So one is cake. Then we're going to talk about the crypto markets. Obviously, a lot has happened here over the past week. We discussed Fed announcement. I think we were pretty spot on correct. Also, with the reaction, it's been super volatile over the last 7 days. We're going to reflect on that, obviously reflect a bit on going forward. And then a third topic, a little bit that we're seeing right now, are an increase of geopolitical tensions, if you want to call this. We saw this with the British pound selling off like crazy to the dollar over the past 36 hours. We have seen rumors in China about flights not happening, about the president, no one really knowing where it is. Then it just kind of gets dismantled again. We see all kinds of election results in Europe. Obviously tensions between the US and Russia flaring up a bit. And what could this mean for the markets going forward? So I think three juicy topics. As always, myself, CEO and co-founder of Cake DeFi, and head of community, Fabio. Fabio, maybe what's happening on your side, share a bit about the sentiment right now as a bit of an intro, and then we're going to go a bit into the cake updates.
Hey, everybody. Let me just check if everything is working. Yeah, I think so. So everybody that's listening in on Twitter Live, you're missing something because as many of you gave the feedback in the YouTube comment section, and I got a few DMs that I need to upgrade my mic. I have done so. So if you're listening to the recording of this on Apple, Spotify, or YouTube,
you could start an ASMR channel, with your mic quality here.
I upgraded to a fairly high standard, so I have a good mic now. It's just that here on Twitter, it's two different audio systems. So I'm using the AirPods on my mobile phone for Twitter and the microphone for my computer and the recording. On the topic of markets, it's tough. I guess a lot of people, we have seen some slight relief rally over the last few hours. We're slightly above 20K again. But overall, and this is mainly a Bitcoin rally, or at least we could see the dominance increasing, which means Bitcoin is slightly outperforming the rest of the market. But the sentiment right now is not that great. If I look on Twitter, like the two communities that the three communities that I see suffer, they all suffer kind of from something else. So of course, in the Bitcoin community, there's still the topic of toxic maximalism and the whole fight, I guess, between Ethereum and Bitcoin is flaring up. On the Ethereum community, you have people are kind of disappointed with the outcomes of the hard fork. Like technically, it's very good, but everybody anticipated that this would have a huge impact on price, which it kind of didn't. The price, we saw a sharp sell-off, of course, due to macro conditions and not specifically on the reason or on the technicals of the hard fork. And then we also have which is discussed, of course, within the Cake community a lot. We have I guess a lot of frustration within the DeFi chain community, also because of price. And I guess there we have a lot of people within our own ecosystem that are fairly new to the crypto system and or the crypto space, that have never experienced the bear market and that are not fully aware that, you know, crypto comes with a lot of volatility, and downside moves to from like 70, 80, 90% are completely normal. If you look at Cardano or Ethereum in 2018, both of them had a 90 plus percent correction and did like 40x or even a 100x afterwards. So, and I guess for our community, within the Cake community, there are a few people that never experienced something like this. It's the first time for them. And of course, this comes with a lot of emotions, especially on Telegram. I can see people are being very emotional. But yeah, I guess that's part of being in crypto, I would say.
For sure. And I mean, this yeah, these emotions and this volatility is quite strong. Yeah, we have just seen here the first question I wanted to reply that, how we have actually just hit 98 cents. This was actually the first question here. Let me just jump to that. You can see it here. And I wanted to address this right away. Why hasn't Cake bought up the DUSD discount? And this was one of the main questions. I wanted to address this here. Yeah, we can see the, I think it's still jumping back and forth for some funny reason. I don't know why. So it's been up and down. The It was one of the main concerns customers had, and they wanted to know why are we not helping with the price. And I want to be very clear: it's not our responsibility at Cake DeFi to help with the DUSD price or with the DUSD price. But one thing we definitely want to do is we want to help the entire ecosystem. We've seen a lot of FUD around DFI, and we've seen a lot of FUD around DUSD. And so it's very, very difficult when you have this kind of sentiment, just like Fabio has shared right now, with a lot of uncertainty and all this, to do anything that helps the price, even though if you believe in the project long term, because anything is going to be used by short sellers and by traders, and that just makes it very, very difficult. And so the Dicker Council has actually just announced an hour ago that they decided on increasing the stabilization fee back to 30%. And that has actually helped relatively quickly, as expected, to stabilize the price. I mean, we've seen the same behavior 3 months ago or 2 months ago, I can't remember. And then only when that stabilization fee got halved, this was when, the entire fee debacle then kind of started a bit, and we saw a bit of a depegging again. So now it seems that the price should be stabilizing. Let me just maybe send that tweet. Close to parity. Sorry that I'm doing this live, but sometimes I have to multitask on this. And that was kind of the very first question here from Bernd. So why doesn't Cake just buy the too much DUSD and take care of the DUSD problem? It's almost impossible to do that because people can just short sell, and it makes it very, very difficult. Right now, the short selling is stopped because there's a 30% stabilization fee if you click in there. And so that stabilization fee really makes it very, very difficult for anyone to short sell, and especially for the short-term traders. So I posted this also on Twitter. I'm expecting especially community members who are short-term focused to struggle a bit with this, and and have a bit of an issue in this. Where did I share this? Here. The short-term traders, FUDers, people who want to see this project fail, they're gonna try to create some negativity. But those that see it long term, they will understand this. And in my opinion, it's the right move. I shared this, and at the moment, the Ticket Council shared here. This is going to be for 7 days, and then afterwards, the fee will be reduced in steps. Which again, not these jumps anymore that we had, I think, a month ago, that at the end really caused some of those issues that we have seen over the past couple of weeks. So actually quite optimistic about what's happening there and what this looks like. So that's that first question I wanted to answer. Sorry, I jumped the gun on this, but I felt this was a key thing to answer in all of that. when Ethereum staking will that be? No, maybe let's do reward dashboard. One of the most asked questions on all this. Fabio, do you want to answer that question next?
Yeah, I'm really careful in what I what I so I actually had a discussion about this just an hour ago, and we are always like one day away from launching this since a very long time, but we want to be 100% certain when we bring this back that it's going to be a flawless experience and that this has not a big impact on our database. And it's just we have so many data points, and this is just because two or three things. Because firstly, we were growing like exponentially throughout Q1, Q2, and Q3 this year. I think we had the strongest week in signups just a week ago or 2 weeks ago. And due to the fact that a lot of currencies and a lot of systems on Cake pay out rewards twice a day, this gets increasingly big to track. Because you can imagine more than 1 million users with more than 2 transactions a day, and this is just if they use one product. If they use many products, so if they are like in staking, in liquidity mining, and in lending, there is even more transactions to be generated and even more that needs to be tracked. So everything is live on staging for beta users. So we have a certain selection of beta testers that for them it's already live. So in my account, I'm a beta tester. It's already live. I can already see it. It's working. But for everybody else, we are looking at this week, but I cannot promise anything because we increase the amount of testing and the amount of data points slowly, and we kind of look at it if it's sustainable, and as soon as we feel comfortable that this is not crashing our system and our database, then we will bring it back for everybody. But we're almost there. It's what I said a month ago as well, but this time we are even closer. So yeah, please bear with us. It's suddenly there will be a moment when you log into your Cake account and it will be back. Of course, we are going to announce that on socials as well. Everything is ready. We're just waiting for the let's go from our VP of Tech.
Yeah, I hope as well. Should be hopefully anytime soon now. So that's yeah, definitely key. Okay, great. Let's answer maybe 3 other questions here. The first one is on the Earn launch. So we launched Earn for Bitcoin. So check this out. You can get up to 10% on Bitcoin. It's native, so that means you put Bitcoin in, you get Bitcoin out. There have been quite some questions on how does this work? Why does this work? We are basically mixing 2 sides of the sides of liquidity mining. In this case, Bitcoin and DFI. And you only have to submit the Bitcoin and someone else only submits the DFI. Now, the question was also, why would some people actually submit the DFI? Well, that always depends a bit on the pool, how big the pool is and how big the rewards are. If there's very few people actually in the DFI pool, but a lot of people in the Bitcoin pool, there could actually be quite some high rewards on the DFI side. So it's always a bit of a kind of matching thing there. Left and right, basically, and it kind of automatically gets matched. And so that's how it works. So if you do the liquidity mining yourself, obviously you can get higher returns. I want to be very clear, but then you have to deal with all of this yourself. So the idea here is that Cake basically matches those that want to do it with DFI and those that want to do it with Bitcoin, and then generate the return that way for either side. And then you don't have to worry about the other side. So it can be people only in Bitcoin, people only in DFI, and the returns are then individually. Obviously, this question about impermanent loss always comes up. The way this gets solved here is by this volatility protection. Every day that you participate in Earn, your right is to have 1% claim of the impermanent loss that is in the insurance pool that gets paid in every single day. So over 100 days, you can claim up to 100% of that entire pool. Now, I want to be clear, in super extreme events, there may not be enough money in the insurance pool for a short amount of times, but this is really, I mean, we backtested that. We have not seen that, even with the crazy volatility we have seen over the past months, even years. So it should be fine, but I want to mention this from a legal side. So the general idea then here is Earn is definitely something that you want to do longer term. So it's different to lending with like institutional lending. because there you have these 4 week cycles. We're going to try to actually reduce those, and have even more transparency from the institutional partners, so that you as a customer really understand how are they actually generating the return, so that you can calculate way easier for you what the potential risks are. And that's going to be very, very transparent and straightforward. But there, you basically get your 3% per year, guaranteed, and you don't have that risk of impermanent loss. After a month, you can just go out. On the earn product, it is different, because if there's just a lot of impermanent loss over the last whatever 28 days, you need to stay in a bit longer in order to compensate for that. But especially the great part about the earn product is that you get your rewards every day, so it becomes a daily cash flow product again. And so if you're just someone who says, you know what, I have Bitcoin, I want to use this product long term, so I'm going to hodl Bitcoin anyways for long term. These are not things that I'm planning on selling right now, so I'm hodling them, and I just want to get cash flow on top. Then I think the earn product is absolutely outstanding. I think over time, actually, the earn product is going to by far outsize the traditional lending that we have. Yeah, so just wanted to highlight that. Check it out. I think it's really, really great. A lot of people are now starting to realize and understand it. And also, I think it takes a little bit until some of the lending batches expire, and then people actually start using their own product. Do you see any questions or comments or something or remarks on in the community, Fabio, that we need to address here?
Yeah, I think we it's slightly difficult to understand a few things how we display it, but please, we are in the process of displaying a few things a little bit different. Like especially you can see an exit APR and an exit APY, and sometimes this doesn't really reflect what it actually should reflect, and it's a little bit confusing. So we're looking into ways into displaying this a little bit better. And maybe we are also thinking about integrating video explanations right within the app, so it is a little bit easier if you want to have like a complete product breakdown. We will try to pack this in so small sized video bits where we explain this right within the app, but this is going to take a few weeks until we show it there. Yeah, other than that, I think the most important questions are already addressed. Yeah, not sure what to add on the earn side.
Oh, no, that sounds good. Then let's move on to the two other questions. Let me quickly pull them up here. Progress of the Cake D token investment. Yeah, so we have actually now completely allocated the funds. We haven't bought the D tokens yet. We wanted to wait a bit on the current Fed announcement. So now this is over. We believe now this is a really good time to kind of go into a long-term position. Not sure we're going to make the detailed announcement this week, but I would say probably latest next week. We're going to post the address where the 15 million DUSD will be at. If the community wants to make a dashboard where they want to track the performance, they are really happy to do so. We want to do this completely public. It's going to be a relatively diversified portfolio. So we're going to be in equities, we're going to be in bonds, we're going to be in precious metals, we're going to be in commodities. We're going to go long, we're going to go short. And so, yeah, we're not going to make comments on why we are making certain investments or why we're not making certain investments. But one thing that will be able to be done is we can vote. We want to do some community involvement on what kind of position should we be changing, what would be community suggestions. So that would be something, and hopefully it will really inspire people to see how strong the use cases for DeFi chain there. We believe in that, and so we're going to invest significant amounts of money, really of our own company treasury, into that system and into diversifying our treasury. So I think let's be safe here and say it's going to happen in the first week of October. But from our side, we have allocated everything. We've decided on the initial allocation, and yeah, once this is get going, we're going to publish this, and then you can track and trace everything for yourself. It's going to be public, and if someone wants to make a dashboard, either laugh with us at the performance or laugh at us with our performance, then you're going to be able to do that. Ethereum staking. Will there be a freezer? So Ethereum staking expected in the next 10 to 14 days to be ready. So let's say 2 weeks. Initially, there will not be a freezer just because there will be the margins are going to be so razor thin there that it's going to be very difficult to really kind of offer something on top. We're already trying to minimize the margins, and we're auto compounding or like compounding every 12 hours, and so thereby trying to get a better APY than you can get anywhere else. On top of it, we're going to host the nodes ourselves here in Singapore. We're not using any external third party to do that, and that's going to be a very strong selling point. We're also going to create a measurement or a measure or a tool that you can get out of the stake position in a liquid manner, similar to what other platforms are doing. So yeah, and that should help you as well there. That you're not stuck until the Shanghai upgrade with all the rewards. Yeah, these are the questions on this. Fabio, anything that we missed or forgot, or anything else that we need to address here?
No, I think on the Cake side, we touched on the most important things. I'm really excited for Ethereum, and especially so if you're within the Ethereum and you were following along the discussions, the main criticism that Ethereum has right now is that there is just one or two providers, and both of them are actually in the US, which control a majority of all stake ETH. And for me, it's super exciting to see a company out of Asia, out of Singapore, where like you need to imagine Singapore is a little bit like Switzerland. They're much more neutral, and it's a different regulatory environment than in the US. And for Ethereum, this provides actually a lot of value, and I look forward to see other players out of Asia offering their own infrastructure as well. And I'm really excited that that Cake is one of the first to move there. I hope every little percent of market share that Cake gets is eventually helping out the Ethereum ecosystem immensely. So I'm super excited for that.
Definitely cool. Great. Then let's maybe do a bit of a reflection on what happened since last week with the Fed announcement. So Fed came out as expected, 0.75%. Increase in rates. Also, as we discussed, probabilities for the next meetings going to be 0.75 for November, 0.5 for December. So on the very high end on what we have been expecting. Just for comparison, 6 weeks ago in August, no one was talking even about these numbers. Like everyone gave it a 0% probability for these numbers, and now everyone takes this for granted. After the dollar had a bit of a kind of breather in June, July, now the dollar is rallying like mad again. On top of it, the Fed has been step by step offloading a bit of its balance sheet. Now, put this a bit into perspective, it offloaded 150 billion. Obviously, I mean, these are on very high numbers here. We're talking about close to 9,000 billion, so close to 9 trillion in assets, and the Fed offloaded a little bit here, right? So I mean, this is tiny. This is like a percent, right? But again, we're feeling all of that. And so, I mean, the expectation is here that this will keep going. All of this together has led to quite some pressure to all the assets. I mean, Bitcoin, Ethereum, stocks, the S&P 500, the Dow. The Dow is now officially in a recession or in a bear market. The S&P obviously back into new lows for the year. Bitcoin has had its lowest weekly candle. Ethereum is close to a lowest weekly candle. So I mean, obviously, and that's where a lot of this pessimism, this kind of pressure is coming from for the people, and they kind of feel that, right? You feel this in the community, you feel this left and right. People sometimes start gnawing on each other. They start hating on each other. This frustration comes in. And before we talk a bit of where we could see this going, Fabio, how do you see this in the community right now? I mean, you mentioned this a bit at the beginning. How is all of this coming along? Volatility, price, and so on.
Yeah. Um, It's hard to say because I usually say there is a reason why people come onto Telegram or come onto social. Like I could see this within the 2018 bear market for myself and also with others. Like if you just look at volume when it comes to social media, we're down, I don't know, 80%. If you look at big accounts like Plan B or Bitcoin Archive or Bitcoin Magazine, they used to get like 10,000, 11,000 likes, and now they barely get a 100. We can see that on the Cake account or on our Telegram as well, that people are just not that interested at the moment. So the only people that we are actually getting coming onto Telegram are usually users that feel very strongly about something or want to voice their frustration or have something emotional to share, which is very challenging. A great shout out or a big shout out to our mod team here. They're dealing with this in a great way. It's tough in bear markets to deal with all kinds of feedback that the community has and brings into our channels. Um, I mentioned this in the beginning of the episode. There is I can really see there is a lot of people that have never been to a bear market, but just if you just look at a few data points. So nobody can foresee the future, but it's if you look into the future, the best thing you have is kind of the past. So, and if you look at the past, when you measure an average drawdown on altcoins, it was like between 90 and 95% within the last two bear markets. And if you look at an average drawdown of Bitcoin, it was like 84 or 85%. And a lot of people think there is not a lot of difference between 85% and 95%, but there is a big difference. It is like more than minus 50% from there. So let's just say Bitcoin has an 85% correction from almost 70K, then it is at 17,000 and something. If it corrects from 74 to 85, that would put us, I think, to 10,500. So on average, if Bitcoin does an average correction, it would put the Bitcoin price slightly above 10,000. And the same goes, of course, for altcoins. And it is if you're in the space, it is wise to expect this volatility because it has been like that in the past. So why should it be any different in the future? And I guess a lot of people are confronting this reality that their investment is down. And of course, in these cases, there is a lot of finger pointing. Then there is, okay, the hard fork, the Ethereum hard fork is the reason why we're going down, or the toxicity on Twitter is the reason why we are going down. And usually these things don't really matter, or they don't really have an impact. Usually it's just the macro that is influencing all of this, the missing liquidity, that the Fed is taking out money and raising interest rates. Or you think there is another reason, Julian?
No, I mean, of course, I think that's don't fight the Fed, right? And paddling against the current is, yeah, it's really gonna wear you out. So yeah, if we a couple of things, right? I mean, I thought this was a really interesting statistic, and that's maybe a bit on the road ahead, right? Just from a gut feeling right now, do you feel we have seen a lot of volatility over the past couple of months or little volatility? And I would assume the majority of people are going to say, oh man, it's going to be, it was volatile like crazy. But it actually really wasn't. The volatile here, right? If we kind of look at this, I mean, it's been more volatile than normal. But if you look at, for example, the great financial crisis, right? I mean, it's way higher. The COVID crash was way more volatile. So at the moment, I mean, yes, it's more volatile than normal, but we are by far not like where total craziness is. And this is now we're talking about stocks and bonds, right? And we're talking about traditional portfolio. If we go into other markets, the picture is actually the exact same, right? So it's really there's nothing out of the extraordinary right now. Yes, we are a little bit more volatile in everything, but it's not like, oh wow, like this is absolutely bonkers. So I mean, okay, so here Tesla, right? Sure, it's a little bit more volatile than normal, but not super crazy. Bonds, yeah, sure, a bit more volatile, but not crazy. And the same, it doesn't matter if we're talking about gold or we're talking about Ethereum or we're talking about Bitcoin. It is actually relatively calm. It's just, and that's the super frustrating part, or the super tough part. It's just been mostly one direction, right? And that direction has been, and I mean, you can just see this here, especially since the high of 69, there just haven't been many weeks that are green, right? So most of the weeks just have been red on a constant downtrend. And that's just what been relatively frustrating for for the average kind of hodler. One interesting statistic I want to bring up here is, and I mean, that brings some hope. For the first time again in 4 years, or yeah, pretty much 4 years, close to 4 years, end of 2018, beginning of 2019, short-term hodlers, so short-term traders, have a better price basis than the long-term hodlers. So the way you can see this is that short-term is pink and long-term is blue. So normally, long-term hodlers have a better price, average price, than short-term, which makes sense because in general, Bitcoin has been going up. And so crypto in general has been going up. So the longer you've been hodling, in general, you had better prices. Whenever this basis crosses, though, right, it's actually when a bottom kind of forms. Now, most of the time afterwards, still price keeps going down slightly, but as a whole, this is more of a bottoming process. And I actually think this is what we are seeing. The question is just now, if this is a bottoming process right now, how long does this bottoming take? So those people that actually talk about a bottoming process, I think they're all right. The question is really, how long does this take? Does this take half a year, as in end of 2018, 2019? And this is when the bottom kind of started, and it took about until like May-ish 2019. I That was a time when I actually started buying aggressively once this bottoming started happening. 2015, it was an entire year until 2016, right? So that is a bit of the question here. I understand, for example, imagine the price right now drops down to, let's say, what a lot of people talk about, 14, 13,000. Sure, it sounds like crazy from today's levels because we would be dropping another 30% basically from here. But in the big scheme of things, right, in all of the crypto prices, it actually doesn't make so much of a difference. And so the reason I just want to kind of highlight this is that if you start dollar cost averaging at these prices right now, and you don't go all in and you don't expect the price to rally like tomorrow, but you're looking at this on a long term scale, I actually think you are in very good company on the long term. Whenever I post these kind of numbers on Twitter or on my YouTube channel and something, for example, my basis in end of 2018, beginning of 2019, and then during the COVID crash, to get into Bitcoin was about between 4 and 5,000. People think, oh wow, like between 4 and 5,000, this is amazing. You caught the bottom. What people don't realize was that Bitcoin actually dipped to 3,000 down. So if I have a 5,000 basis and it dips down to 3,000, we're talking about a 40% crash. So a 40% crash right now is from 20 down to 12,000. So just imagine this, right? Imagine if you basically have the same kind of basis that I had back then, or an even more dramatic example, my very first kind of strong Bitcoin purchases were at around $500. Now people are like, oh, $500, you almost caught the bottom. No, no, no. In this cycle, the bottom was like 220 or something. So more than 50% lower. So just imagine you're buying at 20,000 and the price goes under 10,000. So this is kind of the example I just always want to give here. And so it was an average, right? I kept buying over weeks and weeks and weeks. And so I think, especially today, when you have this opportunity to get cash flow. So when you buy Bitcoin, get cash flow in your Bitcoin. When you buy ETH, get cash flow in your ETH. When you buy DFI, get cash flow in your DFI, and so on. Whatever coin you're buying, you want to get this cash flow because it's gonna make your time hodling actually way easier. But just statistically here, for the very first time in a long time again, so it's the fourth time ever, we're actually seeing short-term hodlers getting better prices than the long-term hodlers, obviously on average. Sure, it is on average. But again, you can just go back, right? And you can look. I mean, the last time we had this kind of low prices here under 20,000, I mean, we're talking over 2 years ago. And obviously, there's a lot of people who bought in 2020 and they sold maybe here on the way up in 2021, or they already sold here on the way down. So there's very few people who actually still hold coins that are older now than 2020. And so the basis right now for people getting in is lower than the long-term hodlers. And this is always an important statistic that I just wanted to highlight in all that. I found this really interesting. I don't know if you had any comments on this, Fabio.
They're great prices right now. If you are fairly new, if you joined the crypto space in 2021 or 2022, this is like the first time that you can accumulate in, actually, I would say, fair prices. Of course, nobody can say where the whole macro landscape is moving towards. Like, there's definitely some gloom and doom on the horizon, especially if you look at the bond market and things that are happening in Europe, the energy crisis, the committed Fed with raising rates. So it would be fair to say that there is more pain to come. Don't fight the Fed, as you said a little bit earlier. But overall, these are great prices. And if you believe in the long-term thesis that Bitcoin is going in to head to six figures and crypto is here to stay, these are definitely prices you want to accumulate. And usually the mistake that people make in bear markets is they're waiting too long and they think it's going to go lower, and then not buying at all. And you never know when things are turning around. It could be tomorrow, it could be today, that there is some kind of black swan, credit markets, repo markets, bond markets, something breaks, and then there needs to be an immediate course. The Fed needs to change course because they need to save something. They need to save the repo market, or they need to save the credit markets, or I don't know, when housing starts to come down. This, like the Damascus sword that nobody is really watching. The change could happen really fast, but nobody can tell you when it will be. So I guess for me, still the best strategy is just DCAing. I'm buying every month, and probably the best place. So if you would ask me, okay, but I'm on the sideline now and I'm expecting lower prices, when should I buy? When should I enter? Probably the best is to watch the Fed, and as soon as you see 10 trillion to save the repo market, or stimulus pack of I don't know, if you see some headline like this, you probably should go all in. But no, of course, never go all in. But this is going to be the headline that changes the market. But when this is going to come, if it's tomorrow, in 3 months, in a year, in 2 years, I don't know. Everybody that can tell you the answer to this question must be a very rich man.
Yeah. Yeah. So how is this going to continue? I mean, I think a lot of it is going to now be looking at the Fed announcements or Fed kind of discussion points this week. There's going to be a lot of geopolitical tension at the moment. Let's see, fingers crossed, that this plays out well, especially China, Ukraine. I mean, we see this, right? And then obviously now suddenly we're seeing not only crypto prices being so volatile, we're actually starting seeing like G20 currencies super volatile. The British pound dropped by almost 5% with an announcement that there should be a tax ease on the public, and so this softened the pound, but it didn't soften it by like 0.5% or something, by like a normal FX move. It did it by a 5% move. Now this is insanely volatile, right? And actually, the pound dropped to an all-time low against the dollar, all-time low. So this is crazy to kind of see this when you kind of reflect on this. Yeah, absolutely bonkers on the one hand to see how strong the dollar is right now, but then on the other hand, how volatile the markets are and how emotional, how difficult they have it in pricing these things. And so if you feel that there's generally higher volatility, you're actually wrong based on the statistics. But if you feel that the market becomes unpredictable at the moment, then I think you're very right. Just because I think most market participants have never seen the kind of ecosystems that we have right now. We haven't seen the Fed tightening so aggressively in, I don't know, 40, 50 years, 70s. Yeah, so 40 years. I think most people either weren't alive or they just can't remember that. And that just tends to be quite obviously people then overreact and and you see this. You see also the emotional swings that people have. So people are super optimistic. The next week they're super pessimistic, and this just makes it very, very tricky and difficult. So as a whole, I would just really encourage you, don't deviate so much from your general strategy right now. Don't listen to people on YouTube or Twitter or Instagram or whatever who are going to tell you what the markets are going to do. Because let's be honest here, I think over the last 3 years, let's even use 3 years, I think there were at least two or three of all the crazy events that people impossibly have predicted. And it was, and I think that just makes it so difficult to kind of position yourself right now. Once we go out with our D token portfolio, where you see how we have allocated 50 million DUSD, then you will also see there are the only thing that you will notice in there is we're just trying to diversify. We're trying to get into a lot of different assets, spread the tickers. And we're not doing this because we just want to spread the tickers. We're actually doing this because it's so difficult to make like bets into our equity is going to do well, our bonds going to do well, our precious metals going to do well, our crypto going to do well, is our fiat currency is going to do well. It's just so tricky. And anyone who tells you different, really, I don't know. I wouldn't take these people too serious at the moment. It was so easy to predict that things would go up over the past 10 years. And it was not because people were good predictors. It was just because the Fed made it very easy. And I think it's a good lesson right now to honestly reflect on that. So, yeah, watching going forward right now, especially this week, Fed, how are they going to kind of communicate their kind of stance for the November meeting? Are they going to double down on the 0.75? Geopolitical stuff. I mean, I don't know. For some reason, it feels like suddenly this is bubbling up a bit. I don't know. Maybe this is just me looking at it from the outside, and maybe on the inside it has always been bubbling. But I just feel like right now, I'm like, my goodness, what's going on? Like, I feel the U.S. and Russia has a bit harsher words. China, well, I don't know. Like, it feels like the U.S. has a bit harsher words for China. And then you in Europe, elections there seem to be swinging left, right, left, right. So it's it's all in all, it feels like more polarized. And I don't know, Fabio, how do you see this from in Europe? I mean, obviously, I'm looking here from like Switzerland of Asia, Singapore here onto the outside a bit, but I don't know. Maybe my kind of gut feeling here is totally wrong.
Um, I guess the message or the big hit is not really here yet. So I can see this myself. So I'm just sharing my personal opinion here. It's not that I'm representing everybody that lives here in Europe. I'm based in the Netherlands, and so my house is heated with gas. And usually we pay around 200 euros for gas costs. So this is cooking, hot water, and heating. And the prices I'm referring to are the winter of 2021 or winter of 2020. In February 2021, with the Ukraine crisis, prices started to increase, but this was also the end of the winter. So during summertime, we almost use no gas at all because cooking doesn't really use a lot of gas. And showering also is probably single digits percentages of our total use. So usually at the end of September, which is right now, going into October, you need to start heating your home. So right now we have average temperatures outside of 12 degrees, which, is fairly cold. So you want to heat your house, probably an average house temperature here in the Netherlands or in Europe is you want to have like 19 or 20 degrees to feel comfortable. And what I see in my own community with my friends is a lot of people, they say, I'm not turning on the heating because right now the gas prices are, if you like my company, they give me the company I'm a customer of, they give me a forecast of how much I need to pay. And right now that forecast is around 700 euros. So it's a little bit more than 3x. Just to compare this, an average rent here in the Netherlands is between 700 and 900 euros. So gas prices are almost as high as an average rent. But this has not completely hit yet because the people don't turn on their heating just now. It's going to probably be at the end of October when they get a letter from their company and they say, hey, you're way behind on your payments and you need to double down. So you need, as an average, before you pay 200, now you should pay 700 or 800. And the first bill is probably, not a large majority of people will not even notice. And then there are some government um, plays in place to help people out. But it's just laughable to me. For example, here in the Netherlands, they give you a better price for the first 1,200 cubic meters. So they say, yeah, we're going to help you out with the first 1,200. If you can keep it underneath 1,200, you don't really have a huge bill. But an average home uses almost double of what they're willing to pay. And after the first 1,200, you're paying market prices. So the big hit, like the baseball bat, is probably going to hit at the end of October or November, and people are really unhappy. And if you need to spend a winter in a cold home, I'm not sure if people are willing to do that. And I can really see that people are going to change their political views, that they want to go onto the streets and voice their frustration. But that hasn't happened yet, at least not here in the Netherlands. We have other things with the farmers and so on. But this, in my opinion, this is really going to be a decisive period this winter. We see the Eurozone struggling, a lot of unhappy people. And I guess the cold and inflation is not going to make it any better. And yeah, you have the ECB cornered. They should raise rates, but they kind of can't. So I think yesterday or the day before, you saw the Italian bonds going from 2% up to almost 5%, which is a big thing. So I don't know. It's going to be a tough winter, I guess, and also kind of exciting. I know we probably shouldn't say that, but I'm also like, yeah, there's at least some drama happening. I know a lot of people are going to suffer from that, but it's interesting at least to follow that, if in a good way or in a bad way. Not sure, probably more in a bad way than in a good way.
Let's hope it's all going to turn out well. I think we covered all the topics, Fabio. Anything we missed? Otherwise, we call it a good episode talking about Cake updates. Briefly mentioned DUSD at the beginning. Looks super solid now. Then, prices, future geopolitical tensions. Stay tuned for more next Tuesday. As always, thanks so much, Fabio. Appreciate it. All the best, everyone. In the meantime, stay healthy, stay safe. For those of you that are here in Singapore for Token 2049 or for meetups or for events or for Formula One, it's a crazy busy week this week. Then drop by at our Cake office. And otherwise, see you next week. Thank you all. Appreciate it. Bye bye.